very well. You guys, let's jump into this cast. So welcome back to another cast with Trend Following Tyson. And the markets have definitely been a bloodbath this week. So let's try to make some sense of this. But we're trend followers, so we should still be riding trends, and some of those positions we should still be long. We don't, just because some of the markets go red doesn't mean we cut all of our positions out. We do manage our capital, we do manage our risk, okay? But we don't sell all of our trends unless we get stopped out, unless all the trends turn into nothing. But we're going to examine the trends. And the reason why that the trends have not all just fell apart, and just because the markets are all red, everything's not over and such forth. We should still be capitalizing and taking positions on some of this panic. Okay, so let's jump into some quotes, let's jump into some science, and then we'll jump into the trend picture. So this right here, I'm pretty sure a lot of people have seen. This is kind of like the assessment, how a trend should look. This is the assessment basic. This is the basics on trend following. This is how you would enter and how you would exit. So just let me give you a quick little look at this. So down here, all right, so the trend's lifting off. The trend's lifting off here, and you might barely make you an entry here. You put your stop below the trend. All right, I like to base my stops based on where the trend should be holding support. My stops are based on support levels. My stops really aren't based too much on capital. Now, you can have your stop based on your capital levels, but technically you should be basing your stops on the trend so that you're riding in perfect sequence with the trend. We're not just buying and selling based on when we want to get out. We should be stopping ourselves out based on the pattern recognition, okay? Based on what the pattern shows and what the trend shows, okay? So stop yourself out below the trend, that's obvious. And then make your entry. If you never get stopped out, you never basically enter. You basically never exit. So you let trends run. You let your profits run, okay? And we do not exit profitable trends at predetermined exits. We never have a predetermined exit. We never have a target price to exit at, because trends run their own lengths. Trends can put up 100 to 1,000% in just one trend, and that may not happen in one day. It may not happen in 1 month, but trends can sometimes add up 1, 2, 3, 4, 500, 600, 1,000% based from your entry. Okay, so never have a predetermined entry for your trend. Always let your trend run. Give it the time and the space to run. Okay, very critical. All right, the next thing here is we'll look at is Jesse Livermore. Okay, we'll take a look at this quote. This is something very special. Okay, all right. So this is not really a quote. It's just some kind of like some factual things here. So you guys know we look at a lot of Jesse Livermore here. We look at a lot of Richard Dennis here, and we look at a lot of Ecyt. These are like the fathers, the grandfathers of trend following. Okay. Jesse Livermore, the most famous trader of all time, maybe one of the most famous traders of all time, made $100 million in 1929. You guys know $100 million in 1929 is like the equivalent to $1 billion or several $1 billion today, okay? That's a lot of money in 1929, a lot. Richard Dennis, the founder of the Turtle Traders, you guys know we do a lot of work on Richard Dennis. He trained Jerry Parker and a lot of people. Ecyt actually came from that turtle trading branch. I think he was taught by Jerry Parker or Michael Marcus. Either one of those gentlemen was Ecyt's kind of father or teacher, so to speak. Richard Dennis, the founder of the turtles markets, made $400 million trading the futures. And Ecyt, possibly the best trader of our time, achieved a return of 250,000% over a 16-year period. And do you know what their trading approach was? They were all trend followers. Now, jump into some more science. My style is basic. This is from Ecyt. We want to know how Ed made 250,000% in 16 years. We want to know. We want to dig up the science. How'd you do that, Ed? He gives you some he gives you some pointers on how he did that. His style. Here you hear it from Ecyt on how he made that 250,000% return. This is to give you guys some juice. This is to give you guys the notation that it's possible. What we're doing here is all a big possibility. It's damn well possible. Okay? Give you guys some juice here. My style is basically trend following with some special pattern recognition and money management algorithms. Trend following mixed with pattern recognition or chart recognition mixed with some very well money management algorithms. Okay? Okay? The trend is your friend except at the end where it bends. I think that that's from Ecyt. That's right. That's from Ecyt. If you guys never heard the and there's a technical analysis book on Jack Schwager. He made in 1955. That's where this quote comes from. Okay? The trend is your friend except at the end where it bends. So we're riding trends until they totally bend out of shape. Okay? We'll pick up something else from Ed. Kind of some science to put into our sauce here of the way that we like to trend follow. The elements of good trading are 1, cutting losses, 2, cutting losses, and 3, cutting losses. If you can follow these 3 rules, you may have a chance. Cut your losses, manage your risk. Let these trends run. It's a very interesting mix. Like I say, sometimes I like to give this analogy. It's like a scientist. A scientist has to have the perfect mix, or else a scientist has to have the perfect mix, because if not, he's going to blow up his laboratory. Or if he has the perfect mix, he's going to be a genius, and his mix is going to work, and he's going to say, voila, this is the secret sauce. This is what we have been designing, and it works without blowing everything up. So you need to have that perfect mix of cutting losses, riding your winners, and money management. Okay? Risk management. Cutting losses, the recognition to the trends, the pattern recognition, the entries, the exits. Okay? And money management. This is the secret sauce to the trend following. If you can have this secret sauce, if you can mad scientist this mixture up perfectly, you may just be one of the greats. You may just be able to pull off 100,000% return. You may be able to pull off 25 to 30 to 40% return a year. Okay? 100% a year. 1,000% a year. Okay? It's possible, guys. We're looking at it right now. With that being said, thank you very much, Ecyt. You guys, I love this criteria that we jumped in today, looking at the possibilities of what trend following can do, the enormous returns. Remember, all the trend followers that we look at, you guys, are very wealthy billionaires and millionaire trend followers. Very, very wealthy. This is not the CNBC game. This is not let's just buy a blind stock without having a freaking reason why we're doing it. This is the real deal here. We have a science on why we're buying these stocks. We're riding these winners until they're not winners anymore. We ride these trends until the end, until where they bend. Okay? Thank you, Ed. Let's start the trend picture off. AMRS kind of doing its little thing here. You see this up here. I made an entry around this break here, and this stock went up to 9 and started retreating. I cut a portion, like half my position out at 850. Kind of took my profits because I didn't want an entry at 8. Okay, and it went up to 9. Remember what we said about a trend when it reverses, okay? Even though this is not a reversal, this is just a blatant pullback, but still we need to protect the profits and the points that we made in there. So if we entered at 780, if we made an entry at 780, okay, going up into 9, this trend reverses all the way back towards $8, you should probably take some of those profits at 8. Don't give everything back. And then once this trend gets going, like it is here, see these greens? Now look, uptrends, all these uptrends and pullbacks. Pullbacks continued. Pullbacks continued. Pullbacks continued. Pullbacks here, continuation. Long uptrend, pullbacks, okay? Now we're seeing the first signs of continuation here with these green candles. So if you took profits here at 80, knocked a portion of your trend off, you can buy this back. Take your full position here. Now, I don't like buying and selling in and out of trends. Once I make my entry farther enough, say I made an entry at 8, okay, this trend only came back to 850, then I would never have to touch it. I wouldn't have to touch any of my profits. But for the simple fact that I could have possibly been giving everything back here, I don't know if this thing was going to close past my $8 entry and close at 750, so I have to protect my profits. But when this trend shows continuation, let's take a full entry. I don't like buying and selling in and out, but if I can enter a trend at 8 and the pullback only comes to 850, minus whatever your ATR is or your average true range or whatever your stops are or whatever you're protecting your profits at, I would definitely like to let this whole thing run with my whole position size in it. And that's what I'm going to be working on, okay? That's what we're trying to do here. But we have no choice. It's called being whipsawed. We have no choice if we have a buy signal and then 2 days later we have a sell signal and then 2 days later we have a buy signal. That's called being whipsawed. That's the price of doing business, okay? So AMRS looks really well, and I like for this thing to continue. Just, I think that thing has super upside, AMRS. So let's just keep following AMRS, let that thing work out, and I'm going to be buying back a large position once that thing closes above 845 and 850, okay? Once the continuation shows itself back in. I still have a large position in AMRS, but I did have to protect the profits that I had in there, okay? Because I don't want to give everything back. I don't have a predetermined entry. I don't have a predetermined exit. I didn't know that the stock was coming back. I didn't know how far it was coming back. My job is to protect my capital and protect my ass. But if that trend's going to run, I want to let it run and let it do it. Let it do its thing. All right, so XENE. We've been long on this thing since about $8.50, $7, somewhere back here. And this thing, like I told you guys, just continues to be a beast. As you see what it did on the 5-day, there's not going to be a super lot of volume in here. There's just not. Okay, this chart's not going to look the greatest because there's not a million in volume every day. But there doesn't really need to be, okay? The stocks are just making their own moves to the upside, all right? So looking very, very well there. XENE, XENE, okay? I like that thing. If you guys are missing that, that's too bad. We've been showing this thing here for months now. I know there's some traders that are barely kind of analyzing XENE today or in the very near future or in the very early past, but we've been on this thing for months, since $7.50, $8, $9, okay? So keep riding XENE, you guys. Congratulations to the trend followers there. This stock has been one of the better behaving stocks with all this crap going on. Like I told you guys, it's an absolute bloodbath out there, and we're just gonna try to keep riding these trends, okay? RCM looks really, really well. This thing has been a winner here. Just a good stock. You see it traveling. Now it's kind of sitting inside this area. I like to go long on this with the stop below this area. If you get stopped out here, that's just the price of doing business, okay? This area can't hold, you know what? Just stop yourself out. There's no need to battle that, okay? But if you can make an entry here without getting stopped out, go ahead and ride that thing out all year. We like to ride these trends without having to buy and sell too much. Buy and sell. But if the market starts whipping us around, we have no choice but to get whipped around. It's the price of business. El Pollo Loco, really nice looking stock, and I don't know how it evaded this show for so long. I don't know how it totally evaded me with all this consistency in higher lows, higher highs and lows here. I don't know how. This is the main kind of structure that we look for. Perfect stock. It's a this company's right around the corner. I can go buy food from there right now if I wanted to. So this is a very decent company. A lot of this thing looks really good. Market cap, the company itself, I know it's an actual thing, quote unquote. This chart could start opening up, guys. It could start opening up. As you see, we're testing this major resistance level here. If we can bust through this, guys, this chart could start to do some wonderful things. I like El Pollo Loco. Wow, that thing looks good, guys. See what it did? Look at the strength here and the consistency on the 5-day. Okay? And what I like to say is however far you can back this structure up. See it on the yearly? See that trajectory on the yearly? The trend looks good on the yearly. Look, trend looks good on the yearly. Trend still showing that structure on the 6-month. Still showing that structure on the 3-month. Still showing that. Now we're in the upward. Now we're going parabolic. You seen the 2 o'clocks all the way up to the 6-month, the 1 year, the 6 to 3, the 3-month even had the 2 o'clock trajectory. Then when you tighten up this time frame, we start getting parabolic. This stock's on the move. Okay, this stock's on the move. All right, this stock has been trading very well, minus the bloodbath going on this week. Okay. I like trading stocks that have a mind of their own. I don't like trading stocks that are going to be red with the rest of the market because Trump needs to wipe his butt. It's ridiculous. I don't like trading stocks like that. And then after, what you guys will notice is that when everything goes back to normal, quote unquote, these stocks will be back in their normal trends. So like we told you guys before, let's buy this panic. All right, let's not just panic with the rest of the market. Let's understand what's going on, understand these patterns, understand their buying points, and let's buy them. And let's ride these trends to the upside. NIHD still looking very well. Kind of still holding this structure here. Yeah, I don't want to mess around with that too much. So NIHD just still kind of holding up this higher highs and lows here. I like this thing long here at 543 with the stop below at 512, 510. You can even say $5 for some buffer space. Okay, I'm basing it off this structure here, the chart pattern here, off these higher highs and lows, what it's holding up in this area. So stop will be below 5, okay? I like NIHD, how it's holding up that structure. CDMO, one of the better stocks. I'm long on this thing. This thing has been, look at the 5 days, because you guys know this whole week has been a bloodbath. So look at this stock on the 5-day, holding up price. All right, setting higher highs and lows still holding up there, not going red based on Trump wiping his butt, not having toilet paper, having to call his wife to the restroom to, hey, could you bring some toilet paper in here, please? And the whole market goes red. All right, this is not one of those cases, but I like this stock for the strength, everything it's doing. Beautiful CDMO. And it's one of the newer. Let me back up the time frames, see how new this stock is. It goes back to 2013. So this stock looking really well, guys. Holding up very well, trading very well. A lot of strength in it. Broke above. Remember we were looking at it here as it was riding up here. And then we were looking at it here as it started consolidating in here. We were looking at it more as it broke out of this consolidation. Now we were still looking at it as it just treads this little higher highs and lows up here. Breaking out again. This stock, what more could you ask for, okay? Stock looking really well, has the market cap to justify everything going on there. ADMA, I like this thing, okay? ADMA, just a beast. Higher highs and lows, consistency in the price action, all right? Okay, here it is here, breaking out above old resistance levels, holding up as a support level. Let's see if this holds up, and you can take a long on this and kind of let this prices just hold up, okay? See that trend there? So ADMA looking well. One of the better, cheaper stocks for this to be a cheap stock. One of the better. See some structure coming into this 5-day. All right. So I like this thing long with the stop below this. Last little level here. Support 620, 615 to buffer it down. All right. And kind of let yourself enjoy this move. See if you can stay long there all year without getting whipped around too much. NSU. I was looking at this stock coming in like Monday, Tuesday, and the first day I looked at it, after I looked at it, the day I said, I like this stock. As soon as I looked at it, it gapped up. Before I even had a chance to say, hey, you guys, take a look at NSU. Before I had a chance to get here and show you guys this thing, it had already gapped up in price. Because I had liked the structure it was holding like this, holding these consistent higher highs and lows. All right, I was a fan of this consistency it was having, and it just gapped up, just totally gapped up. I was looking at this thing and I said, I want to show these guys how good we look on NSU, and this stock just gapped up and went through the runners. So NSU looking good there with a market cap to protect, to kind of justify what's going on. The Rubicon Project, I'm long here. This thing isn't a super mover, but it has some super upside. Very nice chart, very nice structure. This is our home run. This is our home run hitting chart pattern that we've been following. This is where our home run's been coming from. They've been coming from this yearly downtrend, from this downtrend on the 5-year, and then a curl in price. A curl in price, a breakout of this downtrend. This is where our home run's been coming from. When we catch these things, we've been catching some significant price movements to the upside with this pattern here, with this chart pattern, with this structure. See this? The 1 year showing strength. The 5 year showing a curl, a breakout of a long-term downtrend. When you see this 5 year breaking out of a downtrend, when you see this 1 year, when you come to the 1 year, you should see structure here. You should see strength here. I like RCM. You see the green candle coming in here. All right. You see the downtrends, up, downtrend. This is kind of basically the same thing we see with all our good uptrends. Uptrend, pullback, uptrend, pullback, uptrend, pullback. Just the whole 9 here. Okay, uptrend, and then you're getting your pullback. Now you got your green candles, possibly getting ready to take over this and enjoy this structure. So I just like for this structure to continue what it's doing. RUBI looking really well. Funko, another stock that kind of has a mind of its own. Another stock that doesn't care about Trump needing toilet paper at the toilet, calling for his wife. Okay? Another resilient. Look at Funko, guys. Let me tell you guys something about this. We've been long. Let me take you back 3 months. I know we've been here 3 months, okay? We've been long this stock since 14, 13, 12. $12, $13, you guys. We've been looking at Funko. Talking about home runs on this show? Huh? Go back and check the shows. Tell me the first time you seen Funko pop up. We've been following this thing since 13, 14, you guys. Absolutely, we have. Congratulations to the longs. Congratulations to the longs. Buy your trends, let your trends ride. If your trends don't stop you out, if you bought this thing right here at 13.56 and it rallied up here to 16, I mean, you never even had to touch any of your shares, your position. You never had a threat. This price never came back to 14. You know, you made an entry here at 13, whatever, $14, and prices rallied up. They never even came back to you. You never had a reason to touch. You could have bought 1,000 shares here at 14 and basically let them run all the way up here without having to touch them. All right? Funko. Absolute beast of a stock that we've been following, and that we have. That's just another home run. Point blank period. Ecyt, another home run from this show. Okay? Another home run. We've been long on this thing from back here. When we noticed this structure here, we were long on it. I've been long on this thing for a long time, guys. I remember this structure back here. When this structure was looking funny like this, what was this? This was back in last year of 2017. I remember this stock from back here. I was trading this thing. When it made this jump here and it started falling, I said, oh, I like this. And it curled right here. I said, I like this curl. This is how long I've been following this stock. From back here, when it curled right here, this is when I was looking at the longs on this freaking thing. At this curling point. That was at $4, $5, $6. Look at it now. Excuse me. Ecyt, WWE will be a $100 stock soon. In my opinion. Give it some time. Sorry you guys missed this lift off. Ecyt will be a $100 stock soon. Okay. Let's check out the 5-day. This thing just continues to keep moving in the right, pullbacks followed by green candles. Pullback here, you could have bought this pullback here at 85, and all right, so this thing hit 89, 90, hit 89 up here, pulled back. Now it's working its way up into 89. You can guarantee when it gets into 89, it will push through it this time. WWE, just a good stock, great stock. See it? Pull back here. Now look at the structure, how it just higher highs and consistency. I mean, this thing loves to consistently set higher highs and lows. Loves setting consistent higher highs and lows. Take that thing to the top, guys. And if you guys are really good trend followers, you probably caught that thing around $20 something, and you're enjoying something really well. So we'll get ready to close up. You guys, let's keep following the trends that are green. Let's keep following the upside. Let's keep buying the pullbacks, because we know the pullbacks end up in Greenland, okay? The trends are ending up in Greenland. So let's keep buying the pullbacks, the long-term. Buying pullbacks and long-term uptrends is still the default trade. We learned that from Larry Tintorelli, who is my master teacher, so to speak. He's my sensei, all right? Along with Ed Psychota and a few other these good trend-following gentlemen. So buying pullbacks and long-term uptrends, the markets are totally red right now. I don't know why, but if you buy these pullbacks now, when they start showing to, start to resolve and start to come back green, when these trends are making sense, okay, buy this pullback. It was a pullback here. Now we're getting green candles to show the confirmation. When you buy those and you look back a month from now, it won't look like anything. It'll just say, oh, we bought here. It won't be like this great disaster. You won't be like, oh, well, the markets were, the Great Depression came and I bought. So buy these times when stocks are pulling back and people are iffy and trends are making pullbacks like they always do, okay? And I wanted to show you guys ARWR, just a point to show. So if the predominant trend is up, see this predominant uptrend? So what that we had some little lower lows and we were holding this support? You should have been buying this support level right here. Because if this is a predominant uptrend, of course the trend's going to continue. Of course, it's just a matter of time before this locomotive of higher highs and lows, the predominant wanting to set prices, wanting to set higher highs and lows, of course it's just a matter of time before those higher highs and lows set in. So any trend that we looked at today, if the predominant trend is in an uptrend and it's pulling back right now for some reason, buy these pullbacks, because of course the trend is predominant and it wants to set more higher highs and lows. Regardless of what it's doing right now, those higher highs and lows are going to come in. Buy your pullbacks on your support levels with your stops, manage your risk, but buy them and knowingly buying them knowingly that these trends are going to continue to do what they want to do, which is they want to set higher highs and lows. Look at ARWR, had a high predominant trend, consistency of wanting to set higher highs and lows, set them, okay, pulled back a little bit into this area, but look where it opened up. Of course this thing wants to set more higher highs and lows, okay? This isn't rocket science, guys. So I'll see you guys back here. We'll see how the markets close tomorrow, and then I'll see you guys back here on in the weekend, and we'll update the trend picture. We'll see how everything looks. All right, so manage that risk and happy trend following, ladies and gentlemen. Let's see if we can get that $250,000 return, 250,000% return over our trading careers here. Okay, wow, good trend following, guys.